Welcome back. You're watching us here on Trading Hour. Perfect time to bring you up to speed with all that's taking place in the F&O space, especially at the start of the March series. It's a healthy day of gains coming in for the market. You have the Nifty, which is doing well. The Nifty Bank, not so much, but that's not a problem. It's been doing the heavy lifting for the bulls over the last few trading sessions. With the IT index was taking a bit of a backseat, but today the IT index is bouncing back. And understandably, the Nifty Bank holding above that 61,000 mark itself. The advanced decline would have your portfolios feel a lot better. We have two stocks advancing for every stock which is declining. And those lines, while they're coming closer, they have maintained a formidable distance between each other as well. And add to all of this, the India VIX is down about 8%. So that makes it a lot better as well. And, fear is perhaps maybe out of system as of now. The Nifty has crossed past that 20-day moving average, holding on to those levels. The question is whether we close above that or not. And then the next levels that we will track would be the 50 and the 100-day moving average, slightly above that 25,700 mark. So those are important levels that we need to track. And for that, both the Nifty Bank and the Nifty IT Index have to move forward. But today's up move has given bulls a lot of support and confidence to go ahead and write some of the options. So 25,600 put, 25,550 put, and the 25,500 put, all of them have been written. These are options that expire next Tuesday. So obviously there is support around that 25,400 to 25,500 mark. That's what these writers believe. But at higher levels, there is supply because of the 50 and the 100-day moving average and the overarching fear about the IT sector. So 25,600 call writers for a premium of 150 rupees are fairly active, telling you around 25,750 thereabouts. There could be some sort of resistance or supply that may come by. The other factor that could lead to that supply also is that if the market was to move towards that 25,700, 25,750 mark, the put call ratio, which has now seen a spike from 0.9 to 1.11, could get into 1.2, 1.3 sort of zones, which may again be a bit of an overheated zone for the put call ratio. Currently, it's absolutely fine. It's seen a bounce from 0.9 to 1.11. But it's the first day of the series, and the March series has a lot of triggers that we need to track. Over the last 10 or 11 March series, 9 of them have been on the positive side. Let's see whether this one also is that. We have the US Fed meet on March 17th, 18th. Then after any sort of clarity coming in on tariffs from the US, geopolitical developments, a lot is taking place in the world. And then we also monitor the AI trade as it unravels in the US and the impact that it has on other players. And finally, towards the end of March, you will have NAV propping from a lot of these institutional investors as the financial year comes to a close. So those would keep the mid and small cap space fairly active in trade. So we'll watch out for all these triggers as they play out in the March series.
Plenty of triggers in the March series to keep an eye out for. Mangalam, thank you for highlighting those for us. Take a short break. Shahzad Madan from TCG Asset Management joins in on the other side. Stay tuned.